Okay, this is Arthur Page, and I'm going to be walking you through my accounting cycle project. Part one had us enter journal entries into the general journal. So I'll go through a few of those and how I got the answers to them. October 1st, Santana Ray invested 49,000 cash, 27,000 computer system, and 8,000 in office equipment in exchange for common stock. So we're going to debit cash since we are increasing that asset. Debit computer system for 27,000, debit the 8,000 office equipment. Then we're going to credit common stock. And the reason we credit that is because we're increasing on that side and we're increasing our debits on this side. Everything's in balance. October 6th, we billed AZ Leasing for 5,700 for services performed. So the keyword here is billed, which means we have not received the money yet. Debit accounts receivable and credit computer service revenue. The reason we did that is the accounts receivable is an asset, so we're debiting that, and we're crediting computer service revenue since it's revenue. So that's going, this is the normal account for that, that's the normal one for that. We're increasing both sides by the same amount. Everything's in balance, and that's the October 6th entry. The general journal is important is because we are recording all the transactions that happen for the business chronologically, and it's the first place transactions are recorded, and it's the starting point to create financial statements for the business. The ledger is where you input each of these journal entries so that they are all separated and it's easy to tell how much you have in each account. For example, cash, we have $47,393. It's also important because it keeps track of all the transactions, separate accounts. Manager can look at this and see when each transaction happened, and it's easy for the business owner to tell what's going on in each account. So we're going to take the totals of each one, input them in here, which I did, and it shows that it balances. The trial balance sheet is important because it double checks that our debits equal our credits and that each entry is mathematically correct. It balances at the bottom, and if it's not in balance, then we should probably go back and double check our journal entries and that we put those correctly into our ledger. So that's why the trial balance is important. It's kind of a final check. Okay, we're at part two. So December 3rd, we paid $440 cash for minor repairs. So we're going to debit repairs expense and we're going to credit cash. So this expense is going up and our cash is going down. December 10th, we paid cash to our employee at a rate of $115 per day. So I multiplied 115 times 6 to get $690. So we're going to debit the wages expense. We are increasing that expense. And then we are going to credit cash since that's going down. Everything remains in balance. That's the general journal on part two. As far as the adjusting entries go, it was a lot easier to skip over it and do the ledger first. So what I did was just load these into there. What's important is that we get the initial balance correct. So we just scroll up to our end of November statement, put those numbers in because that's where we started off at. And then we put our entries in. November 2nd, we had a cash credit, so we're decreasing that. Went down a little bit, and so on and so forth. As far as the adjusting entries go, an inventory count showed that we had $650 available. So what I did was I went to the ledger, went to our computer supplies. Obviously, we did our general entries, so we have an updated balance here, and we know that we were left with $650 at the end of the month. So I just took 4,545, subtracted 650, and we got the amount of supplies that we used up. So we credited that, and that left us with $650. As far as putting it in here goes, debited that computer supplies expense and credited the computer supplies. We have less supplies now, and we have a higher expense for the computer supplies. We'll do one more. Part B, 3 months have expired since the 12-month insurance premium was paid. So I scrolled up to our prepaid insurance, 1,860. I divided that by 12 to get the price per month, which was $155 per month. Multiplied that by 3 months, which has been how long the business has been going for, October to December. And that gave me $465. So our insurance expense went up, we debited that, and our prepaid insurance went down. As an asset, we used $465 of it up. So our depreciation expense, that expense went up 450, and our accumulated depreciation, this is a contra asset, so that went down. So everything remained in balance. Now we're on the trial balance. Like I said, this one's important because it double checks that our debits equal our credits. And one thing to pay attention to here is that the contra assets, like these depreciation accounts, get credited. They take away from our asset value of the office equipment and the computer equipment. So there's our assets, there's our liabilities, there's our equity. And yeah, I just loaded the final balances in here. Okay, the income statement. This is important because it shows how much the company has profited or lost. Gives information about the company, how much it's making. It helps business owners make informed decisions about expenses, future investments, and it allows business owners to develop a business strategy based on whatever how much expenses we have. Maybe they should find a way to decrease that or something like that. So, and again, I just kind of loaded them from the past statements. So our computer service revenue came from the trial balance sheet right there. Put that in. Same thing as all of our expenses. We just took all of those, plugged them in, subtracted our revenue by our total expenses, and that gave us our net income. Okay, next is the statement of retained earnings. This one's important because it shows how much profit the business has accumulated over time and allows investors to make informed decisions about how profitable the business is. Investors can see that if they're paying a lot of dividends or not. We got 7,200 here, and it leaves us with our retained earnings. Investors can see how much we're retaining year after year. So I just took the net income from our income statement, put it in there, subtracted the dividends from our trial balance sheet, and because it's retained earnings. Now we're on the balance sheet. This one's a snapshot in time. It shows the assets, liabilities, and equity, how much we own versus how much we owe. Shows investors if they want to invest or not. You can quickly kind of look at this and see how liquid the assets are, see how much we owe to people, and take a look at the overall health of the business. Lenders can look how much debt you have, how much liabilities you have, how much cash you have. Allows people to make informed decisions about your business. Our cash came from our trial balance. Accounts receivable, same thing. All those, same thing. We add them up, got our total assets. This is a classified statement, so it's also going to separate the plant assets out, which is equipment, land, stuff like that. And it also shows you that your assets equal your liabilities and equity, so it shows that it balances. Okay, so closing entries are important because it zeroes out the revenues, expenses, and dividends from the previous year. If you don't close those out, then it'll just start to carry on. So, for example, the revenue from the previous year on January 1st. If we didn't close it out, it showed 36,000, and then the year after that it showed 70,000, and so on. So you want to close them out at the end of the year so that you get accurate numbers on the next year. The way I close this out is the computer service revenue. I debited that. It's a normal credit balance. So we close it out by doing the opposite, taking it out of here and putting it in here basically. As far as our expenses go, again, we can look at the income statement. These are all debits normally. So we're going to do the opposite. We're going to credit them to close them out. And we're going to add them all up. And we get our income summary over here. Down here, I made a misstep. I put that in for some reason. The way you're supposed to get that is you could take your income summary from this one and subtract 16,000 from it, which would give us $19,482. Then we would subtract our retained earnings from our retained earnings statement, 12,282, and that would give us 7,200. So the number that's supposed to be here is 19,482. Finally, we're on the post-closing trial balance sheet. This one's important because it ensures credits still equal the debits, and that the accounting cycle is complete after we did our closing entries, and now we make sure everything's equal one last time to close out the accounting cycle. We'll just input these in, make sure it balances, and that's the accounting cycle.